At this point in my investing journey, every stock and every business that I want to be buying in my portfolio, I want to have it be a forever stock. A forever stock is a company that you can ideally buy at any valuation, any price, and over a long-term time horizon, you can't really go wrong with buying it. So today, I'm going to be sharing two of those forever companies that I am planning to build up in my portfolio. These are two companies that I already own, I have talked highly of in the past, and I will be sharing with you those stocks, going over some key financials, and so much more. I'll also be sharing what I love about their business that makes me think that they can stay around for the next 60, 70 years. And the only thing that can stay around for the next 60 and 70 years besides these companies I'm sharing today is the Do Dividend Stocks Not Drugs merchandise, the best quality merchandise for any dividend investor. The link's in the description. Thank you, and roll the intro.
Hello, I like money.
The software that I'll be using for today's video to show you all the data from these companies is dividenddata.com. You want to help support the channel, use my link in the description. It greatly helps. I get a big portion of that sale. On to the video. Alright, the first forever dividend stock in my portfolio at the moment is Costco, stock ticker COST, and this should come to no surprise to anybody. Now, as I mentioned before, Costco is one of the best business models in the world because of their membership-based business. Essentially, you can't just walk into a Costco unless you have a membership. With these memberships, you basically sign up every year. You pay Costco $50, $60, $70 or whatever for your different membership level. They collect that money, and you basically get access to all of Costco's items on bulk or discount. This gives you an amazing experience as a customer and also gives Costco an amazing business model. Costco's grown these memberships and shown great pricing power as well, with growing the membership's prices over time as well. People love their experience so much at Costco, they really don't care if the price of the membership gets increased over time. This is a great way for Costco to show pricing power during tougher economic times when inflation is high or anything else that really impacts their business that's not in their control. This makes Costco so appealing as a retail company, maybe compared to other retailers like Walmart and maybe Target. I resent that. But in all seriousness though, Costco is a behemoth of a business. Unfortunately, the only bad thing about Costco is really the stock price and the valuation. You look at the chart here just based off of the stock price chart, it is trading at an all-time high right now. It's trading a ridiculous price. I remember I started my Costco position and I thought it was overvalued back when it was trading at $535, and look at it now. It just shows why you shouldn't wait on the sidelines to buy amazing quality businesses. I wish I would have loaded up when it was in the 530s, and look where it's at now. Costco is one of those companies, though, that historically trades at a really high premium valuation, and you're just going to be willing to accept that. Costco is one of those businesses, though, that's going to be around for the next 50, 60, 70 years and thrive. Recently, too, Costco actually just paid a special dividend, and today they actually just paid me their regular dividend. I got about $5 for my pretty small position, and it was pretty cool to see. It was my first ever special dividend that I've ever received. We can see, looking at the quarterly earnings per share chart, that Costco has consistently grown their earnings at a pretty solid rate. Costco's dividend growth is very quality, but the dividend yield is really nothing to write home about. If you're looking for more dividend yield and you're a dividend-focused investor, this probably isn't the greatest stock for you, but dividend yield investing is probably not the greatest strategy if you're looking for total returns over the long term. Charlie Munger was fond of his Costco stock, and he was famously notably said, if you're going to buy Costco for the long term, it's best not to wait on the sidelines and just buy. It's one of those kind of businesses, and I couldn't agree more. I will say this, though, personally, I don't want to be buying at these crazy all-time highs. I think eventually it will go down. When it does go down, I will definitely buy more. But over the long term, I can nearly guarantee that Costco is going to continue growing their earnings, and I could probably say their stock price will go up as a result. You can even look at the stock price chart too. Looking at all-time highs and these crazy spikes like 10, 15 years ago, it's nothing compared to where it's at now, and hopefully that trend will continue. Free cash flow is the most important metric when looking at any business's health. Basically, if you're looking for dividends, buybacks, total returns at the end of the day, free cash flow is the most important metric. Dividends are the result of a company's free cash flow, and Costco is one of those businesses that consistently grows their earnings and free cash flows. We'd see they have a 3-year growth rate on the free cash flow of 3.56%, a 5-year growth rate of 18.89% on the free cash flow, and a 10-year growth rate of 17.2%. And we can see that they largely and consistently produce free cash flows. It's one of the most important things, if not the most important, when looking at a business financials. So the free cash flow for Costco checks out. You can see there are some years with declines, but that's mainly due to the special dividend that they pay out. Essentially, they'll be taking a big part of that free cash flow that they can't re-intelligently spend back into their business and just pay it as a special dividend. So that's where that money is going. As I said, Costco does historically trade at a very rich and premium valuation. Looking at the PE ratio to start off here, we can see they currently trade at a PE ratio of 41.54. Now we can see historically that is a little higher. It would be a better time obviously to buy when it was a little bit of a spike. We can see historically it has traded up recently. So if you were to see a bit of a recent little decline in there, I think you could make the argument that that is long-term fair value. But even if you were to buy the stock in the 2000s when it was pretty much trading at a really relatively near valuation, it really would have had a great return still. So just goes to show you should not be waiting on the sidelines for an amazing business like Costco. Right now, me personally, I'm not adding any more to my Costco position. The last time I bought, I believe, was at $650, and it was just a tiny increment addition. And we could see even the prices ran up by about like $50, $60, $70 from then. So honestly wild to see with Costco, but if it were to pull back in price a little bit, I would definitely have to buy more. I think it's one of those companies that you could, honest to God, hold for 30, 40, 50, 60 years and buy no matter what the price is. I know I should be living by that statement, but overall I think in the market a lot of stuff is really overhyped right now, and I think eventually as the market kind of settles down, people get scared once again, Costco will be a lot more appealing for me when it comes to the price. Now for the next forever dividend stock, I could have gone with a repeat one that I've done like every month, which is Visa, stock ticker V. I think Visa is one of the best businesses in the entire world, but I want to mix it up a little bit for you guys. And what other business in the world could possibly be up here with a company like Costco? And it's of course Microsoft, stock ticker MSFT. Microsoft is currently the largest holding in my dividend growth portfolio for the long term, and it's by a wide margin too. I was loading up on Microsoft when it was trading in the $230 and $240 range, and it really has gone well for me since. Now, I didn't predict that they'd become an AI giant and a big player in that, and I honestly did not invest for the AI side of things. That's just an addition. I'll take the added free cash flow though. I will say this though, I did buy Microsoft for its robust gaming business and its amazing cloud business. The cloud business is a recurring revenue stream. It is just such a strong business, and that's what I really invested in for. But unfortunately, Microsoft is now an AI company, and I haven't been able to buy any at a reasonable price compared to where my cost per share is at. Microsoft is an amazing dividend growth option as well. Microsoft's dividend is quite literally a mere reflection of the free cash flow growth. It's absolutely nuts. Both are pretty much 10%, 10%, and that's the purest example of when I say dividends are the result of a company's free cash flow. I always point them right back at Microsoft stock. Microsoft may have a micro dividend yield of 0.74%, but as I mentioned, they've consistently grown it. Microsoft's free cash flow growth has pretty much been picture perfect, and it rivals a company like Visa's. Their 3-year growth rate on the free cash flow is 10.58%. Their 5-year growth rate is 13.93%, and their 10-year growth rate is 10.62%. That 10-year growth rate is pretty much identical to the dividend growth rate as well. We could say they just produce large, growing, consistent amounts of free cash flow, and their stock price has been rewarded because of that. Microsoft also just reported amazing earnings last quarter and saw robust growth with AI. Microsoft's dividend growth rate has pretty much been in line with the free cash flow, so I'm not even going to bother to show it. We can see their current payout ratio, though, is very sustainable, with a free cash flow payout ratio of 33.29% and an earnings per share payout ratio, which I pay less attention to because of accounting reasons, is 27.36%. So definitely checks out when it comes to sustainability. If I had to make a bet, if I were a betting man, I would say they probably hike the dividend another 10% next year. Right now with Microsoft in my portfolio, I'm not adding any. It's my biggest position by a wide margin right now. So me personally, if it were to go back down to maybe $300, $320 range, I'd probably start buying more in smaller increments because I think it's an amazing business. But for me to really load the deck once again, it would probably have to go back in the 280s, 270s. I would definitely load up a lot more. Alright, I want to thank you all so much for making the video. Let me know your thoughts on Costco and Microsoft stock, and Visa obviously is the bonus. If you guys want to check out more videos from mine, check out the description box. I have playlists of my stock analysis series and my portfolio. Thank you guys for watching. Check out the Do Dividend Stocks Not Drugs merchandise. Smash the like button and subscribe. And of course, Do Dividend Stocks Not Drugs. Have a good one.